Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, as well as the crucial level for both the indices. We'll also be discussing on the main sectors in focus in trade today, as well as the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So in trade on Tuesday, all the three major US indices finished the day with modest gains. Despite a choppy trading session, the Dow managed to close at a fresh record high. Going ahead, the zone of 5,560 will act as the immediate support for the S&P 500, while on the upside, any sustainable move above the levels of 5,650 will lead to a sharp upside rally towards the levels of 5,720, followed by 5,780 in the short term. Brent oil has ended at 78.93 with a cut of 1.59%. Going ahead, the 50-day EMA zone, that is 80.50, 80.60, will act as the immediate hurdle for Brent oil. Coming to the update regarding the dollar index, so DXY has continued its southward journey as it ended lower by 0.3% on Tuesday. This downward trend in DXY is a positive signal for emerging markets such as India. Now coming to the update regarding our market. So in trade yesterday, the benchmark index Nifty, that is, traded in a narrow range of just 99 points and formed a doji candlestick. This clearly indicates indecisiveness among the market participants at an all-time high level. However, the momentum indicators and oscillators are indicating bullish momentum in the index. The daily RSI is in a bullish territory. Going ahead, the index is likely to continue its upward journey and test the levels of 25,130 followed by 25,250 in the short term, while on the downside, the zone of 24,930 will act as the immediate support for the index. If the index slips below the mark of 24,930, then the next support is placed at 24,820 levels. On the derivative front, if we see, the August futures ended lower by 0.1%. The cumulative open interest of the current, next and far series has surged by 2.21%. Coming to the option chain data, that is for tomorrow's expiry, 25,100 strike has significant call open interest followed by 25,200, and on the put side, 25,000 has substantial open interest followed by 24,900. Coming to the update regarding Bank Nifty, so Bank Nifty witnessed higher volatility on Tuesday as it traded in 466 point range, which was the highest daily range in the last 4 trading sessions. During the session, it failed to sustain above the levels of 51,400 and thereafter witnessed minor profit booking before ending the session on a relatively flat note. On the daily scale, if we see, the index has formed a long-legged doji candlestick pattern which indicates indecisiveness at the current levels. Going ahead, the gap zone of 51,400 will act as the immediate hurdle for the index. Any sustainable move above the levels of 51,400 will lead to a sharp rally towards the levels of 51,800 followed by 52,300 in the short term. On the downside, support has shifted higher in the zone of 50,900 levels. Coming to the option chain data regarding Bank Nifty, so today we have the expiry for Bank Nifty. At the current juncture, 51,500 strike has significant call open interest followed by 52,000 strike, and on the put side, 51,000 has substantial open interest followed by 50,500 strike. Coming to the key market indicators, so since the last couple of trading sessions, the volatility index India VIX has been oscillating between 14.04 and 10.84. A clear breakout beyond this range could trigger a significant directional move. Coming to the advanced decline ratio, so if we see in trade yesterday, the advanced decline ratio tilted in favor of the advancing counters. Coming to the key sectors in focus, so Nifty IT, Nifty Pharma and Nifty Healthcare are likely to outperform in the short term, while Nifty Financial Services witnessed a sharp upside rally on Tuesday. We believe it is likely to continue its upward journey and in the next couple of trading sessions. Coming to the FII DI data, so in the cash segment, that is, FIIs purchased to the tune of 1,503 crores, while DIIs sold to the tune of 604 crores. This is the first time in 27 trading days that DIs have turned net sellers in the cash segment. That's it for today's edition of the podcast. Thank you for regularly tuning in and listening to the podcast. Wishing you all a happy and energetic trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.